Welcome, champion entrepreneurs. We are live from the GoCEO studios where we talk to CEOs, founders, and visionaries about their businesses and, more importantly, the characteristics and personal strategies of the man or the woman behind the business so we can better understand what led to such immense success. I'm Cory Bergeron, your host. I am a former national TV spokesperson for over 350 brands, speaker, author, CEO, and business coach. We have a jam-packed segment for you today. We are featuring Mr. Chris Norton with iBankers Direct. And Chris is the guy that you go to when you're looking for that more speculative investment. However, most people would consider those investments high risk, whereas working with Chris provides you some due diligence and some protection that you might not find by working with someone else. He's really good at what he does. A lot of members of Board of Advisors, which is our sponsor, Board of Advisors, the world's greatest mastermind. A lot of those members do business with Chris and endorse him heavily, and we're anxious to talk to him today. So if I asked you, what is iBankers and what do you do every day, how do you respond to that, Chris?
So iBankers is a boutique investment bank. Company's been around for 20 years. What I focus on is late stage venture capital companies, generally private companies that are looking to go public in the next few years. And I'm looking to basically identify shares in those companies that I can buy at what I believe is a discount to intrinsic value, where if we have an IPO or a liquidity event, like the sale, they're liquidated at a profit.
That makes sense. So if you, when people take a look at their portfolio and they're looking at, okay, I've got low risk stuff that I kind of anchor to, it's my foundation. And then I've got the kind of the stuff in the middle that's a little bit speculative. And then I've got the stuff that's kind of high risk and speculative. Where do you believe most of your clients fall?
Most of my guys are on the more aggressive end of the spectrum, but it's really on a deal by deal basis. Like if you're investing in SpaceX, that's an $80 billion company, even though it's not public yet, that doesn't necessarily mean that you could find, 5 out of 10 publicly traded companies are higher risk than investing in SpaceX because of the size and how mature that a lot of these companies are becoming in the private market. Companies are taking much longer to go public. Because of that, they're more mature, which de-risks the investment to a degree. Even though they're not public yet, they're much larger and those businesses are much more viable. And there's a lot more at stake for the owners, where if there's no liquidity event, they're also not able to cash out. So everyone's aligned in the sense that eventually there needs to be a liquidity event, either a sell of the company or an IPO for those owners, executives, and my clients and shareholders to cash out.
Sure. All right. Now, lay out for me real quick here, up until the point where you created iBankers. What did your experience look like? Take me on a journey of your professional career up to that moment.
So I didn't create iBankers. I work for iBankers as the senior vice president of the company and one of the directors of our IBD Ventures fund. I started in the industry when I was attending Hofstra. I went to a job fair in my second year that I was at Hofstra, and I ended up taking a summer internship that turned into a career. I ended up completing my courses, and finishing up at night and on the weekends. And I really got into the financial industry at 19 years old at that point. And I've been doing it ever since. I've worked for a number of different brokerage firms and just slowly worked my way up. And no different than any other business, just built a book of clients, relationships where, the better that my relationships have become, the more successful I've become in my business. And that's taken, 10, 12, 13 years to build up over, a period of successful investments and years.
So you started at 19. That would make you what, like 24 now? I'm kidding. I'm kidding. I'm so kidding.
33.
All right. So you've been doing this for a while, right? And iBankers, how long have you been with them?
I've been with iBankers for 3 years.
3 years. All right. Now, when you look back on your life and if I were to go back to 10-year-old Chris Norton and I were to say, all right, Chris, looking at 10-year-old Chris Norton and looking at Chris Norton today, what is it that is a common personality characteristic that has served you so well over time and has given you the success you have now?
I think just persistence. I think just like anyone else in business, there's times when you want to throw in the towel and things aren't working out for you, and it seems like it's an uphill battle. but just kind of sticking with it and, continuing to maintain, develop and kind of, grow those relationships over time, I think is really what's made me successful. But persistence, I think more than anything is I think the biggest tool that I've had to get to where I am today.
That makes sense. I mean, a common entrepreneurial trait, right? Just move and move and move. Forward motion is it. Never go back. Like just forward and working hard and keeping your nose to the grindstone. Okay. So when you take a look at prospective companies that you may want to open up to your investors, give me some things that jump out at you and say, yes, this makes sense. This could be a good investment. And give me some red flags that you look at and you're like, absolutely not, I'm walking away.
We look for, in the secondary market is where we do a lot of our transactions. So pre-IPOs. So we look for a dislocated price. We look to find distressed sellers. That guy maybe wants to buy a house, maybe wants to buy a boat, a car, and needs the capital. And so we can step in and provide it to them. Also, there's some sellers out there that they have options as part of their compensation package, and they need to exercise those options by a certain date. And if they don't exercise those options to own those shares by a certain date, those shares will wind up worthless. That's a motivated seller. So the shares may be trading in the secondary market, hypothetically at $12 or $13. But if there's a guy that's motivated to sell because his options are expiring, maybe I can get those shares for $9 or $10. So we look for, companies that we can find those types of sellers. We obviously look for companies that are growing significantly more than the rest of the industry. And we look for companies that have taken late stage venture capital money. So if they've taken money from a Fidelity, for example, late stage, Fidelity has limited partners as well, and they need to return capital to those limited partners. So that company most of the time is not going to stay private indefinitely, because if they ever want to get another dollar from Fidelity, they have to deliver on their promise to take it public in the short term. So that's one of the things we look for, is companies that not always, but most likely will have a near-term exit within a 12 to 36 month time frame of us getting involved prior to it being public.
All right. Can you share any recent stories about investments that worked out so well? I mean, I've heard so many names like just murmured and circulating within the BA community about, ooh, it was this, or ooh, it was that. Can you share with us some success stories you've had lately?
Yeah, we got involved with SoFi. We bought shares depending upon what round you participated in. I think we bought them in the high nines and in the $13 range. If you got in round A, you got it closer to 9 and some change. If you got into round B, you got it closer to 13 and some change. And they ended up going public. And for every one share that clients had, they got 1.74 shares in the new company. So they got additional shares on the IPO. And guys, I think are up about 250% on their money if they got in round A on SoFi. That's an investment we made in BA in October of last year. So within a year, they're up 250%. We got involved in SpaceX in the 200s. We recently bought some more in the 500s. I think the stock is like 650 now. Before BA, we did a deal called Hydrofarm, which was the second largest hydroponic lighting company in North America at the time. And we did the deal at $12 a share and with warrants. So an additional share of stock is what a warrant is at 17. The company was as high as 90. And I think the stock is in the 30s or 40s now, but that was, 25,000 into $250,000 if you sold it right when the lockup expired type of a deal. That was probably in the last few years, that was probably the best return that we've had, was the Hydrofarm.
Good Lord. So Mike, I know you're standing there right now. You're kind of slathering, like the drool is running down your beard.
It is. I'm sitting here squeezing my gold bars. Tanner, I know you thought they were real. They're really foam, buddy. Okay. All right. No, I want to expand on that. So let's take a moment to really draw this picture very well. Everyone that's in BA is obviously a business owner, founder, an investor. We're definitely not job havers in the sense of, we're usually kicking off profit, and we're trying to mitigate some of that profit or the taxes that are associated with that profit. So let's take a guy like Kingsley or Adam Taylor, or just the individuals in BA that can help us do so well with our accountancy and our tax strategy. And many times, let's just say you get a tax bill for $250,000. Well, actually we could use Fulmer. I think Fulmer, I saw him on the call. Yeah. So Nick, I'm going to share some numbers. Is that okay? Beautiful. Love you, Nick. Good seeing you out of that meeting too. So Nick had a $300,000 tax bill, was with Kingsley, got it down to $60,000, right? So a lot of that strategy though is carving off those funds and putting them into tax deferment containers or tax-free containers. Tax deferment usually allows you to put more in there faster, right? Tax-free is usually a slower mechanism, but it's the golden, that's where we all want to end up, right? So whether it be a pension plan with self-directed LLCs in it, or whether it be, cap alts or captives or whatever the instrument is, the idea for us is to lower our tax base, get that into a deferment bucket, and then now we have funds that are perfectly suited for a guy like Chris. We've got to do something with it, otherwise it's just sitting there, and we want to put those dollars to work. That's the whole idea, right? So we mitigate our tax, and then we actually put those dollars to work in some sort of retirement bucket. Now, what I normally like, just to make this really simple, everybody should be looking at some form of real estate. Look at a guy like RJ. The guy's where he's at because of real estate. Real estate, I believe, is the backbone of investing. But, it can be, there's actually a lot of benefits to it. You got your cost segs, you got your depreciation, but it can be, as my good friend Ed Coble says, it can be a little slow, right? But it works, and we're all familiar with it. Stocks, I love stocks, and here's why I love stocks. You can put your money in, and if you need it quickly, you can pull your money out. Obviously, if you put your money in the right stuff, it grows. But if you put your money in the wrong stuff, it does not grow. But what I like about it is real estate sometimes, to get your money out, you either need to do a refi, or you'll pull some equity out, or you've got to liquidate the property. And sometimes that all takes time and it takes paperwork, but it's available. Stocks, obviously, you can sell that. If you need the money, you can sell the stock, right? And there's some strategies behind when to sell and when not to sell based on what type of tax you want to pay, short-term, long-term. And then, as my good friend Mike Theodore and RJ Polano like to call them, you've got these things called flyers. Now, let's just say it's a little bit of a higher risk scenario, but it's also a higher payout opportunity, right? So we all want to hear the big story about how we put, like SoFi is a great example. I don't think SoFi is done growing, right, Chris? SoFi's, I think it's still got a little ways to go.
I think the important thing to point out is that when people hear IPO, they immediately think risk. And they're right. They're right to a degree to think that. But what they need to be reminded of is companies now are taking longer to go public. So they're becoming much more mature as private companies, which inherently de-risk the investment. If the company's worth a few $1 billion and it's private, that doesn't necessarily mean it's significantly more risky than a company that's a publicly traded vehicle that's a few $1 billion to the same size. It's because of the structure of the market that you have an opportunity to buy pre-IPO and cash in when they ultimately go public, because not everyone has that same access. So
exactly. And a lot of these, you're exactly right. These are associated with high risk. What I love about Chris is he brings a sophistication and experience to these early stage or what are considered to be higher risk opportunities, but he brings a little more security to it in the sense of, like, let's just use a general topic about, we were going to cover some crypto, blockchain technologies. And if you're trading on your own, it can be very daunting. I mean, there's so many different things out there, and to keep track of it, you almost turn into a trader, right? But to be able to work with a gentleman like Chris, where they have potentially organized a fund that focuses on certain type of aspects, and then you become safer in these flyer opportunities due to all their hard work and diligence up to this point. So, I got to really encourage everybody right now. We are, from a financial perspective, these blockchain technologies and these cryptos and, where we are going with digital currencies and transactions, Bobby Tinsley will tell you, it is the future. So there is a lot of crap out there, but there's also a lot of opportunity to get some what we call parabolic growth or hyper growth, right? So we don't want to spread, we're not going to go all in one or the other, but if you're not taking advantage of a conversation like we're having here with Chris today on some of those upper end opportunity, I mean,
Can I say something? A flyer would be you investing in a biotechnology stock that has one product and is looking to get FDA approval. It may get approval, it may not. It may go to zero if it doesn't get approved. When you invest in a company like SoFi or SpaceX, there's an underlying operating business. They're growing revenue. They're doing over $1 billion in revenue a year in the case of SoFi. They're growing, and they're not pinning all of their hopes on just one specific thing. Not that it's not aggressive, it's on the aggressive side of the spectrum, but I wouldn't necessarily call something like that a flyer.
Well, what's a term you would call it?
I would just say it's an aggressive growth stock. I would say something
aggressive.
But I think that if you want me to talk a little bit about the crypto, so the investment that we were doing through Emilio, the point of this call basically, is it's a cryptocurrency fund or a digital asset fund where they're going to be investing in blockchain, decentralized finance, NFTs, metaverse plays. The fund has a goal of raising about $50 million in assets, and they're looking to make 25 to 30 different investments with the capital that they raise. So they're looking to have multiple shots on goal, so that they're not going to be pinning their hopes on just one company. There's going to be 25 to 30 within that portfolio. And they're not going to be in the business of saying that, Bitcoin dropped 30% today, let's go out and buy Bitcoin. That's not what they're doing. They're going to be investing in seed stage companies, so very early round A and pre-seed rounds of financing in cryptocurrency infrastructure. So if you participate in the fund, you're going to be participating alongside, if anyone knows Solana, the Solana Foundation, they are investing in the same round as we are in two of the investments that are already in the fund. So you're able to invest alongside the Solana Foundation, the 9th largest cryptocurrency in the world, in the same round in a seed stage venture. It's the access to those type of investments that the fund offers that I think makes it appealing to guys.
Absolutely. Understood. And
the best investment you can make, though, is in you.
Say that again.
I was trying to do all that to lead up to the best investment you can make is in you. It was a math equation I was trying to come up with, and it just didn't go off so well. But at least we got it done.
Fair enough.
I'm smiling, Mike. I'm smiling.
That's all that counts, Cory.
I got it.
As long as Cory's smiling, everybody should be smiling, right?
Hey, listen, Chris. Let me ask you just a question about your career up until now. If you were to say this is the biggest mistake I ever made, and here is how I got past it, and here's how everyone else should get past it, what would you say?
Mine might be a lot different. Mine's a company called Amrin. Not selling it is probably the biggest career mistake I've made. Stock has dropped from 20 down to like 4. So I think that everyone goes through those experiences where you just have to bump your head a number of times to be able to to figure out where you're stumbling. I can't really point to, I think maybe being too trusting and not doing enough due diligence earlier in my career. The more due diligence that I do and dig it deep into the company, and also not going with my gut. I think that when you talk with someone and you have a conversation with someone, I think that you can get a pretty good idea who that person is. And if for some reason you're speaking with that person and they completely turn you off, and they could say the best thing in the world, but I think going with your gut is, following my gut is probably the the thing that I would say that I made a mistake about in the past that I think going forward would help me, the
Gotcha.
most.
And when you do business with somebody, how do you want them walking away feeling after they've done business with you? What's your goal?
Like they've gotten full service, that I've explained the product to them. Like I want them to walk away and say, hey, Chris took the time not only to sell this to me, but to explain to me exactly how this works. And I wish that all the people that I dealt with in financial products would do this for me, because, it was a pleasant experience. I didn't feel like he just pushed something down my throat or took a cookie cutter approach and said, you're going to buy this basket of stocks. I think that would be what I would want them to take away.
When we compare you to other people who do what you do, is that what you feel is the kind of the discriminating difference? That's what working with you looks like versus working with kind of everyone else?
Yeah. And I'm not looking to take 100% of your IRA and put it into pre-IPO stocks. Like it's not suitable for you to do that. What I do is I deal with guys that have a high net worth, and I manage 20 to 30 to 40% of their assets in a very high growth way. So yeah, I think that I'd want them to take that away, that I take the time out to explain these things where they understand it. And they also understand that, I'm looking out. I want the client to come away knowing that I'm looking out for their best interest, because when they know that, that's when my business really starts to grow and they start to give referrals, because they know that I'm not going to tell them to over leverage or over allocate themselves into one thing. Even though it would benefit me maybe in the short term, it wouldn't in the long term. And that relationship is what's most important.
Yeah, I understand. Okay. Chris, how long have you been with BA now?
This is going on my second year.
Year 2. All right. Awesome. Mike, you want to say something?
Yeah, the one thing that I like about Chris, that everybody should leverage the relationship with Chris, not only the investments, but the advisement. Tanner and I were in another deal. Some stuff got weird. I call Chris. He's got so much experience and he lives in that world that, there's a lot of resource there for all of us, even if it's not his scenario or his opportunities. He's so giving. And you're right, RJ. Like I probably talk to Chris a couple times a week. And, when he calls, I know he's got something important. And that's what I feel that the relationships in BA are, right? So it's not just, hey, Chris wants you to get involved in his opportunity. Chris is a wonderful advisor to the group when it comes to all types of investing, and especially the mindset of investing, because sometimes things go up, sometimes they go down, sometimes you get nervous, scared money doesn't make money. And, we all get a little nervous when things go weird. Chris is the guy you call, even if it's not his deal. He's just got that real calm, cool, collected approach that I think is extremely helpful. So Chris, love you, buddy.
I appreciate that, because I think you need to be, like, if you look even at Netflix, which is a huge stock, monster company. Netflix has dropped over 50% over 8 times in the last 10 years. So for you to end up getting that few 1,000% or few 100% return in Netflix, you've had to endure over 50% corrections. So if you don't, know what you own and have conviction behind what you buy and take the time to buy it and hold it and do it the right way, you could easily get shaken out of a position. So if anyone has an investment that they'd like to have an opinion on, I'm happy to, I'm happy to review it with you and tell you if I think it's a good one or it's a bad one. Doesn't mean that I'm right on it, but I'm happy to spend the time with you and explain to you what you own if you don't understand what you own.
So listen, we're getting up to the top of the hour here. I want to be able to respect everybody's time. Mike, I want to come back to you for just a minute because you've heard a lot of conversation here. Give me your top 2 takeaways from everything that you heard in this discussion. What have you taken away from this?
The number one thing is definitely don't use the word syndication. The number 2 thing is trust but verify by asking the right questions, asking the right people, and doing your research. Okay, so that's number 1. Trust but verify. Ask the right people, ask the right questions, and do the research. The second thing is the right relationships bring the right access, and access creates the advantage. So, sometimes you just don't have the right access, so you really don't have an advantage on the competition or even in life. So that's really what we're talking about here, is access to the right resources. And I love really what people said. Crypto is here to stay. Crypto, blockchain, these technologies are here to stay. Get familiar with them. I do agree, 90+% of them are junk. And the real focus, if you are beginning to qualify these types of opportunities or these crypto, if you're just doing your own trading, the real focus is on three things: speed, security, and energy. How fast can it be? How secure can it be in the sense of the decentralization? And then the energy consumption and the carbon footprint. How efficient is it? The ones that are really bringing utility and solutions in those three areas are going to be the winners. And that's how I think I would begin if you're on your own or in conversations with Chris. If you're beginning to qualify any of them out there, that's the three kind of measuring sticks you want to put them up against.
Thank you so much for joining us for this week's segment of GoCEO. We look forward to seeing you on the next one. Take care. Bye-bye.